Good evening, ladies and gentlemen. My name is Adrian Day. I'm one of your co-hosts for the quarterly On the Move seminar, webinar that we do. I'm going to introduce you to my co-host, my good friend, Rich Checkan. He's the president, COO of Asset Strategies International. I've known him, 40 years maybe, at least 35 anyway.
At least 3 decades.
And of course, I know your uncle, Michael Checkan, who was one of the founders of the firm. I've known him even longer than that. So not quite when we were in short pants, but almost. So Rich, over to you to introduce the seminar and our special guest.
All right. And also to introduce you, my esteemed co-host, Adrian Day of Adrian Day Asset Management. I think everybody knows him. He was a London native. He went to the London School of Economics, started out as an investment writer, published author, money manager, fund manager. He manages the Europac Gold Fund. Much sought after speaker, you name it, he's been there, and all around good guy. I think I can say that, right? Am I allowed to say that?
You're allowed to say that.
Okay, all right. And so Adrian and I are very, very happy to welcome Doug Casey, none other than the Doug Casey here tonight. Just go through some of his accomplishments: best-selling author, world-renowned speculator, libertarian philosopher, world traveler. He's lived in 10 countries, visited 175, to include, as I understand, some dysfunctional hellholes. He spends most of his time nowadays in Uruguay and Argentina at La Estancia de Cafayette, development that he started, I believe, right, Doug, years ago. And I understand.
Much to my personal financial distress, I knew, well, I'd heard for many years, that the only person that makes money on a golf course is the third one that buys it out of bankruptcy. So,
the distressed property, right?
Yeah. So I've done smarter things in my life, but yeah, it was okay.
Well, I think we're going to get into this maybe a little bit later, but I think there's other distressed real estate that we'll be able to find in these markets here before too long. We can get into that a little bit, but I'm going to start off with the topic du jour. It's probably been covered and overcovered. I know we shared one article you had done, Doug, on the topic with some of our readers, just kind of prep for this event here tonight. But it's on everybody's mind. We just came back from a conference in Florida, and everybody's talking about the banking crisis, right? Silicon Valley and others have gone down, and I guess just kind of wanting to dissect it. I know it's probably been ripped apart by everybody and his uncle, but in your words, what happened? Is it over? And what are the ramifications?
Well, I don't want to talk about the Silicon Valley Bank and these other couple of banks that have gone over recently. The problem is it's a systemic failure that we're looking at. It starts with the fractional reserve system, which starts and is only possible with the Federal Reserve. So all of the banks today are bankrupt. It's not at all like classical banking, where a dollar is deposited and that dollar is, let's say, and the bank pays 3% and to the depositor, and then lends it out for 6%, capturing the 3% difference for profit and risk and so forth, overhead. That's not the way it works anymore. That same dollar can be lent out many times. And it's actually worse than that, because that's talking about savings account deposits or time deposits. What they've done is they've melded together time deposits and demand deposits. Nobody's aware of this anymore. The distinction has been totally lost. But with demand deposits, it's a totally different kind of business. You're supposed to pay the bank for storing your money safely, and the right to write checks against it, to transfer it. There's no difference anymore. So all the banks in the world are bankrupt. They're all held up by central banks. And of course, all the governments in the world are bankrupt too, held up by central banks. And sometimes the government holds up the central banks. So it's a gigantic daisy chain. It should have collapsed many, many years ago, but they've kept building the pyramid higher. I think this is I think we're at the end of the game right now. Could have happened in 2009, could have happened in 2000, could have happened back in the early 80s, could have happened as far back as the 70s. But I think this is it.
And could I expand on it? Why do you think it's it? Is it because the problems of the lender of last resort at this point? Because you said they should have failed long ago. I'm not a big fan of bailing out bad businesses, right? If a bad business does bad things, they should go under. And those that invested in it, if they invested in a bad business, should take the losses. That's the way capitalism works, right? That's how you kind of weed out the bad businesses from the good businesses that are going to be profitable. But the government propped them up, right? So is the government running out of the juice to prop them up? Is that why the end is near?
Yes, that's one reason. The world is very, very much indebted. And it's only been in the last few years that the Federal Reserve, which was always looked upon with awe as a splendorous institution that earned the government money every year, it's losing money on its income statement. And its balance sheet is an actual engine of inflation. I mean, because we all know the way we know the way it works. I'm not sure everybody does. It's that with the government running $1 trillion or $2 trillion per year deficits these days, they can't finance it with tax dollars. So what they do is they sell debt, but not anymore to individual American citizens or even the Chinese and Japanese. They sell the debt to the Federal Reserve at this point. And the Federal Reserve pays for it by printing up digital dollars and depositing them in commercial banks. And this is the actual engine of inflation. So yeah, I think we've come to the end of the road. I mean,
it's an actual, I mean, it really is a Ponzi scheme, because you hit on a really good point there, Doug. I think if you ask most people, you know, who follow anything at all about economics, who are the largest holders of US treasuries? Some would say China, some would say Japan. But as you said, the Federal Reserve is far and away the #1 holder of treasuries. And then you look at the pie chart of who owns it. Social Security is the 2nd largest holder. State and local governments are the 3rd largest holder. So they're just selling all this stuff to themselves.
Yes.
And you don't have to be a PhD in economics to figure out there's something a little bit weird about this, when one arm of government can just print money to buy the debt of another arm of government. Just doesn't make sense.
What's being produced there? You know, what's the value to society?
Absolutely. I know you're negative value.
Yeah,
and it's funny you said you don't have to be a PhD in economics, because the Federal Reserve is the largest employer of economists, I guess, in the world. And they're all idiots. They serve no useful purpose at all.
Yeah, I think they have 400 PhDs in Washington, at the Eccles Building in Washington. And the problem is they're all focused on a very narrow subject. If you wanted to talk about, oh, I don't know, labor economics with one of them, he could probably talk for 8 hours about the subject. But they don't seem to have, to me, they don't seem to have any way of, they seem to lack a certain common sense, and they don't seem to have any way of putting that in the context of an economy. And they all work with models. This is one of my bugbears about the Federal Reserve. They all have these models, and they think somehow if you change this input here, you know, you can just tweak this input and the result will be lower inflation. But they seem to forget that every time you change the input, people's behavior changes. You know, prices go up and people change behavior. Dollar goes down, people's behavior changes. People's behavior always changes. So you know, the way of looking at the economy as some gigantic model that can just be tweaked is really hubris. And frankly, it's hubris to think that 7 people sitting around a table should be able to dictate the most important price that there is, the price of money.
They influence every market on earth.
Yeah,
basically.
yeah.
Well, it's actually much worse than that.
Oh,
because
I thought that was bad enough.
no, it's much worse than that, because all of these people have been inculcated in Keynesian doctrines, which basically say that the government not only can but should control the way the world works. And they're not economists anyway; they really aren't. An economist is somebody who describes the way the world works, and they don't do that. These people are like glorified accountants
Yeah.
that instead prescribe, not describe, the way they think the world ought to work and tell politicians how to enforce their notions on society. So, of course, the Federal Reserve should be abolished. But if it was, the entire banking system as it's currently constituted would collapse.
Right.
But it's going to collapse anyway. Actually, I'm a believer that when you have a 100-story building that's about to collapse, it's better to have a controlled demolition than to wait for it to fall at random when it can do the most damage.
Right, right. Well, no, you're absolutely right about the banking. I mean, you mentioned the leverage, which I don't think people understand just how leveraged most banks are. They somehow think banks are safe and solid. There's also the incredible mismatch of duration between the deposits and the loans they make. When you think about it, people put in their money in savings accounts and in checking accounts, and then the bank is lending it out for 10, 20, and 30 years. I mean, my gosh, what could go wrong with that? The other thing, of course, you're a student of the history of banking, Doug, and you know that in the last century, a lot of banks were partnerships, and even if they weren't partnerships, certainly this is true in England, even if they were corporations, the chief owners of that bank were responsible. They were responsible for all of any banking losses. And you remember that the big banks in Switzerland up until the 70s used to be partnerships, like Pictet, where the partners were actually responsible. Now, if you're one of 50 partners of Pictet and you are responsible for that bank, you can bet your bottom dollar that you treat it a lot more conservatively than if you just know the Fed will bail you out.
Well, that's absolutely right. But the whole world has changed, and the whole world has become over-financialized, where there are trillions and trillions and trillions of dollars. In fact, look, it's not just there are so many hundreds of trillions of dollars in the bond market, which is all debt, which a lot of it's not going to be able to be paid and will collapse and bring down institutions. It's that this money's flowed into the stock market, which has made the stock market in general grossly overpriced. And well, people aren't even in the stock market. People don't buy stocks, they buy ETFs, which to my way of thinking are basically a scam where these brokerage firms package up a bunch of stocks and take a rake off the top. But it's not even things that are distant from the actual companies, which nobody pays attention to. It's the options market at this point. In fact, even with commodities, you don't even buy commodities anymore. You buy and sell options on commodities. So the whole world is grossly over financialized. Instead of being a tiny portion of a productive economy, the financial world has become gigantic. I think it's an accident waiting to happen. And I think it's going to happen this time around. Well, famous last words. It's not
we've never heard that before, Doug.
So I think that was a good point to segue to the next question. But before we do, we got a couple here that I want to throw out, if that's okay, Adrian.
Yeah.
So Paul asks, why not pass the selling of bonds to the Fed, interest bearing, and just spend money into circulation without interest?
Well, I think that's a stupid question, not to insult the questioner, but look, the Fed shouldn't be in business. We shouldn't be using paper money. We should be using gold as money, which was the case before 1933. So I can't answer a question like that because it's based on a ridiculous and false premise. Fed shouldn't be there. Paper shouldn't be used as money. Gold should be used as money.
I tend to agree with you. So I was a pre-med major. I wasn't a specialist in gold or economics or anything in college. I was studying to be a doctor, and then I chose to be an infantry officer. And then I got out and I found my uncle. He found me, selling metals for 27 years. And that's really where my education started. But a lot of it to me is just simple common sense. And I agree with you, Doug. They're not in the business that they should be in. They're in the business of governing, or they should be as a government. They should not be in the business of finances. The markets can and are able to take care of that. Somebody said, when the best cure for higher prices is higher prices. People stop buying. They change their habits. They change their behaviors. The markets can take care of themselves. Why do we have to tamper in them all the time?
Look, that's the essence of the problem. The US government should have zero involvement in the financial markets. None, absolutely none. The government should, since the government is an instrument of coercion, it should do nothing but protect its citizens from coercion. That implies a police force for domestic coercion, a military for foreign coercion, and a court system to adjudicate disputes without resorting to coercion. So if the government did nothing but those three things, I'd be fine with it. And we wouldn't have the problems we have today. Unfortunately, those three things are so critical to the running of a civilized society. They're the three areas that the government and the kind of people who inevitably go to work for government shouldn't be in. They can best be all, believe it or not, those three things could all best be left to the market besides. So no, I don't believe government itself serves a useful purpose.
Yeah, no, absolutely. Well, let me segue as Rich suggested, and we've sort of hinted at this when talking about the problems of banks and so on. Part of a problem with where we are right now is not so much that interest rates moved up rapidly, it's that we had 15 years, 30 years, 50 years of easy money, going all the way back to Greenspan. We've had excessively easy money, excessively low interest rates. And of course, we've had the Fed put the assumption that the Fed will bail people out. And so that has led, among other things, both social and economic, because it's led to a lot of social problems, but the economic thing it's led to is asset inflation. So if you look around the world, look around assets today, Doug, after 20 years, 30 years of asset inflation, do you see anything that you would regard as good value, good fundamental value today worth buying?
No, we're at the tail end of a bull market in bonds that started in the early 1980s. I think a lot of people aren't even aware of the fact that in the early 1980s, the US government itself was paying 16% for short-term money at times. So for almost the last 40 years, bonds have been going up in value while prices of bonds have been going down. And now it's going to go into reverse. And bonds are, which are by far the largest asset class, are a triple threat to your wealth. They're the interest rate threat. I think interest rates have to go much higher for a lot of reasons we can talk about, and therefore bonds are going lower. The currency threat, because bonds are denominated in currencies, and the dollar is losing value rapidly and radically. And the third thing is the default risk. Well, I'm not talking about US government bonds. They can print out money to pay them off, but other bonds. So bonds are the kiss of death. They're a triple threat to capital. Forget about bonds. What's next? Stocks. Well, all this money, the trillions that have been created, especially in recent years, have flowed into the stock market and private equity and securities generally. I think they're grossly overpriced. Even in the cryptos, one example of that is Dogecoin, which was started as a joke. I call it doggy coin because it's got a dog as a symbol. It's still worth $8 billion, but actually it serves no useful purpose whatsoever. It's a joke. So I think things have a lot further to deflate in the securities market. And we go to real estate. And the problem with real estate in the US certainly, and to a lesser degree in Europe, is that it floats on a sea of debt. You can't buy and you can't sell real estate in the US unless you can get a mortgage. Well, that's going to be a real problem because we've gone from really cheap mortgages widely available to now expensive mortgages getting much more expensive and not available. So I think that we're in a position where real estate prices could come down a lot lower. So what are we left with? Frankly, we're left with commodities. And so basically, I'm very happy in this environment because I'm long the metals. We can talk about all the different metals and a whole bunch of other commodities at this point. Those are the only places to be right now. Very convenient for the three of us, not so convenient for the public at large.
I was just going to say, I'm glad to hear your kind of corroboration there. I was on the phone with a longtime client and friend, Angelo, yesterday and last week, and he's like, Rich, what should I get into right now? And, what should I buy? And I'm like, Angelo, in this environment where, asset values are falling, at the same time, while the cost of everything you need is going up, right now, I think you want to focus on trying to make money in things that people absolutely need. And that really just talks about commodities. It talks about energy. It talks about agriculture. I think personally, it talks about gold, whether you realize it or not. You should be buying gold here and silver and things of this nature. But it talks about real things that people absolutely need to survive on a daily basis or in this world. I don't know what else to recommend at this point. Not that I'm really in a position to do so.
I think there's a few stocks that you can trade, you can rent, as they say.
Yeah.
But I don't know that there's anything you want to be buying as an investment at this point, frankly. Very, very, very little.
Yes, almost everything is either a speculation or a gamble. I think at this point, there are very few solid, sound investments that, listen, everybody wishes that they bought Microsoft 40 years ago and just held on to it. I don't know if there are many things like that anymore. I'll tell you what, as I look at my portfolio, it's full of crappy little gold stocks, not as crappy as the ones I used to buy in the past. But mining is a crappy industry. It's a lousy industry. It's about the worst industry in the world. So it's not an investment. Mining is always a speculation. But I own a lot of those stocks right now. They're very, very cheap by any parameter. And we can talk about the mining business in particular. And oil, everybody hates oil now because, the world is going electric and, oil emits carbon.
But the world can't go electric.
I know, it's a scam.
We can't make this planet rotate without dinosaur juice.
It's a scam. It's a scam. But the point I'm trying to make is that fund managers who are all cranked out of universities and their heads are filled with ridiculous ideas, then they get on boards of directors and they have to vote for ESG and DIE stuff. So the oil industry is very unpopular right now. And as we speak, there are a lot of oil companies that are selling for 3, 4, 5, 6, 7 times earnings and yielding 8-10% or more in dividends. So I'm buying a lot of these oil stocks, gold stocks, other metal stocks, oil stocks, coal. Here's something that is the kiss of death if you're in polite company, coal. I particularly like Australian coal stocks. Now, coal's run up a lot. Is it going to run back down and all these stocks will crash? Well, they're still so cheap, it doesn't matter if they crash. I mean, Australian coal stocks, which are the cheapest class of them that I know of anyway, are selling for 2 or 3 times earnings and are yielding 10 to 20% in dividends. Now, those dividends fluctuate radically, as do the oil stocks dividends, but I think they're a good place to be. We can talk about other areas, but
well, certainly later on, we'd like to ask you for some names, if you don't mind giving us some names. But let's look at gold first of all, if we may. You mentioned that to quote you have a lot of crappy little gold stocks. Is there a reason that you avoid the major miners and maybe the big royalty companies?
Well, of course, as you know, Adrian, because I know you were an early buyer and holder of Franco-Nevada, which has treated you very well, I think. And now there are what, 2 dozen? I don't know.
At least.
Royalty companies. I still think they're a great way to fly, and I own the royalty companies. But, theoretically, gold mining companies should be coining money right now. Because let's say gold is at 2,000 and the all-in sustaining costs, which I don't know if most people understand that concept. It's different from the cash costs of mines and so forth. Is a bit over $1,000 right now. So a company that's the typical company mining gold right now is making $1,000 after everything for each ounce of gold it mines. But people don't want to own them. People don't want to buy them today. I like them. And I think gold is going higher. So at some point, since it's a tiny little portion of the market, I don't like the big companies because the management don't own shares in them, generally speaking. They're run like big corporations. And big corporations are basically stupid. Not all, but generally. So I like the small ones that are run by the entrepreneurs still.
Yeah,
So
that's a good point. And you remember Warren Buffett made that famous, he has some good aphorisms, even though I don't particularly like his politics, but I think he said something, he likes to buy a company that could be run by an idiot because sooner or later it will be. And, that's what tends to happen with companies. I'm not saying Paul Brink, the CEO of Franco-Nevada, is an idiot, far from it. But, as companies get bigger and more established, they do tend to become much more bureaucratized. Certainly ESG and other things start to play a much larger role. And they lose that entrepreneurial spirit to some extent. I'm not talking about Franco-Nevada, but just, as the companies get bigger, that's certainly true. Yeah.
Well, they're not as nimble. They lose touch with what they do in life. They lose their purpose, I guess. Go ahead.
That's right. And back in the old days, after gold was legalized in 1971, when I first started playing with these stocks, before I really knew anything about them, quite frankly, I think we've had like 4 bull markets in the last 50 years where the junior stocks as a whole have run 10 for 1, with some stocks going 100 to 1 and some going 1,000 to 1. I say that because I personally owned at least one that went 1,000 to 1, and I owned a lot more than one share in it. So they're very volatile. These things are not small caps. They're not even micro caps. They're not even nano caps.
I was going to say nano caps.
Hypo caps. So that basically when you blow on them, they double. And my feeling is, since the average person in the public knows nothing about them, he's been taught that gold is stupid, it's a pet rock, etc. At some point, they're going to go back to gold. And when they do, it's going to be an avalanche. And so that's the way I'm playing it. And
well, yeah, you mentioned a good point, or that brings up a good point. As we know, the average amount of exposure among institutions to gold assets right now is less than 0.5%. Typically, you would have 2 to 4% would be a more average, more typical longer term exposure. And that in itself is very low. And I'm talking about all gold assets. If you look at the amount of assets in gold ETFs, and this isn't a perfect, of course, because there's other ways of buying gold, but if you look at the amount of assets in gold ETFs relative to the amount of assets in the S&P ETF, you're looking at less than 1.5%. So, and that even underestimates the difference, because of course a lot of people buy individual stocks, whereas in the gold market, the ETFs represent a much larger portion of the pool. So yeah, you don't need much of an inflow for those numbers to double. And that would mean, that the individual stocks going up, as you say, 10 to 1 quite easily. I think we're very close.
And that's right. And the oil stocks have gone up some in the last year or two, but to draw a similar analogy to oil stocks, back in, what was it, 1980 or 82, oil stocks were about 25% of the S&P 500. Just recently, they got down to, was it 2%? Maybe they're up to 4% now. But it's the same thing. They're almost equally cheap.
Yeah, and Exxon famously being kicked out of the Dow index. But yeah, commodities as a whole, you know this, Doug, as well as I do, but commodity index relative to the S&P, is, other than the last couple of years, is at its lowest point since the 1920s. I mean, they are remarkably undervalued relative to equities, which are remarkably overvalued.
Yeah, everybody wants to own digits at this point. I think that's a mistake. Now, I say that as somebody who reads a lot of history, as I know you do, and the longest bear market in all of history is commodities. I mean, 10,000 years ago, if you owned a piece of copper, you were a caveman billionaire, in effect. And all commodities, in real terms, have been dropping since day one. But that said, cyclically, there are explosive up moves. And right now, with the world economy as unstable as it is, especially world currencies, as flaky as they are, now's the time to get there.
We lost you for a second.
Yeah, you were coming in garbled. Can you try saying that? It looks like it might have cleared up here. You were frozen for a
Yes,
second.
it did. Don't forget, I'm in Buenos Aires right now. And,
Well, and we're in America, so that doesn't mean it's much better here.
no, not much better, especially since America's following in the footsteps of Argentina. Where did I stop talking about commodities being in a long-term downtrend?
Exactly. That's where we lost you.
Okay, so well, perhaps you can edit this together or not. It's that the longest bear market in history is commodities. They've been going down in real terms for the last 10,000 years. And now's the time to buy commodities. Within that downtrend, they're explosive when they get cheap.
Can I ask this? So, get back to my friend Angelo. He was saying, okay, well, how do I own agriculture, right? How do I participate in that market? For me, it's very obvious with energy. You can own individual companies, or in various different methods of producing energy. You can own precious metals. You can own mining stocks. I understand precious metals. Where do you go for ag participation, if you will? How do you get that done?
Well, again, agriculture is another crappy industry. I mean, being a farmer is hard work and the returns are very low, except for that, except for that 1 year out of 5 when soybeans really run up faster than the cost of producing them.
Gotcha.
But the answer to the question is there's some ag stocks out there. You can buy a couple of big fertilizer stocks, which are off considerably, like 40% from their recent peak. The way I solve it personally is in Uruguay and Argentina, I own a bunch of farmland. And like my farm in Uruguay, we have 150 cows, which is a teeny weeny herd by local standards. But we've got a lake and a big river and can fish out of there. We have hogs and chickens and a garden. So maybe that's the best way to participate in agriculture.
It's not for everyone, is it?
Yeah, no, it's not for everyone. It's hard work and you can't make any money on it. Listen, there was a time when I thought, you know what, I'll get a herd of cattle. And every year, every mama cow is going to have a baby cow. And then 2 years later, the baby cow has another baby cow. And it's like an exponential growth. Well, it doesn't work that way for all kinds of reasons that I could go into.
Have you heard about, Jeremy Clarkson, the British TV presenter.
yeah, right. Yeah, that show.
Car
Wonderful
show.
show. Yeah,
He's got a show now on, I think it's called Clarkson's Farm.
yeah.
Have you seen that?
Yeah, it's wonderful, wonderful.
Yeah, but it just really illustrates, I mean, this is a bright guy with a lot of money, but it just illustrates the problems day to day, hour to hour. I know I couldn't do it. Yeah.
Is it time to start investing in insect farms? Because that's what we're going to eat it someday, right?
Yeah, well, the powers that be would like to have us not eating meat. That's pretty obvious.
See, I think we need to eat meat, Doug. So I'm going to get on this green bandwagon, right? So I want to eliminate all the cows from the planet, and I'd like to do it one ribeye at a time.
Right.
You're doing your part, right?
Exactly.
You know, talking of agriculture, as Doug mentioned, fertilizer stocks, there's a lot of fertilizer stocks, obviously. There's also, as Doug mentioned, publicly traded companies that own agricultural land, one that we own a lot of. You know, you remember David Gladstone, don't you, Doug?
Who?
David Gladstone.
Yes, I do.
Yeah.
Oh, I'd like to talk to you about him afterwards, but go ahead.
Yeah, so he's got a couple of BDCs, but he also started this company called Gladstone Land, where they buy the farms from the farmer and they lease them back triple net to the farmer. So they don't have to do the farming, but they own the land. And you know, that the symbol is LAND. That's got a symbol of about 3.5%. And they don't do, gosh, Doug, you know more about this than I do. They do a lot of berries and nuts and things like that are more what do you call them?
Non-commodity type.
Yeah,
farmers.
they don't have wheat or anything like that. And
Yeah.
they certainly don't do hogs and cattle. But you know, that to me is a pretty good way of getting some exposure to that area.
That's a good tip, Adrian. I like that idea because you don't want to be in these big commodity type things like soybeans, wheat, and corn. They've got all kinds of problems, some of which, like, you know, one problem with those big commodities is they're grown in gigantic monocultures. And I'm just asking myself at some point whether some blight or virus or something is going to take out thousands of square miles of those things, whether accidentally or intentionally. But berries and nuts, that's very smart.
Yeah. Well, you mentioned that farming is a bad business. I think
Mining is a bad business.
mining and maybe airlines compete for being the three worst business.
Restaurants.
I mean, if you were to design theoretically the ideal business, it would not be one where you have to spend millions and millions of dollars looking for something with a 1 in 100, 1 in 1,000 chance of finding it, where you then have to go through years of asking permission if you can actually build the thing. Then you have to spend hundreds of millions of dollars to build it. And once you built it, the government says, maybe we need a little more of that. I mean, that is just a bad, and of course, you don't know what the price of the product you're selling is going to be when you're building it. So it's just a bad business. No one would design a good business like the mining business.
Oh, it's worse than, as you know, it's worse than that, because in addition, there are going to be indigenous people that decide that they want part of it, and lots of NGOs, of which there are thousands, that are going to make your life miserable and try to shake you down for even more. Yeah, it's horrible business. So mining is we're speculating in the stocks. But this is one reason why we're going to experience a commodity shortage when it comes to metals. It used to be you found some gold, it was like having a gold mine. Your life was made. But now you find a gold strike and your troubles have just begun. You won't be able to start producing it for 10 years after raising lots of money and blah, blah, blah. So, and this is true of every metal, copper and uranium and nickel and you name it.
Well, the copper mines, of course, are even worse because you look at the large copper mines and you look at when they started production and when they were discovered, it's often 20, 30 years from discovery before they actually start producing. And they're not just, $100 million, they're $1 billion and $2 billion to build. So, yeah.
And like the richest copper mines in the world are in the copper belt in Congo and Zambia. But wait a minute, does anybody really want to put $1 billion or $2 billion into those crazy bankrupt countries? Probably not.
Yeah. So you mentioned gold. We talked a little bit about gold. We talked about oil. Would you still be buying the oil stocks today?
I would, Adrian, because the ones that I'm looking at, and in particular, I'll give you a couple things that I like. One is Petrobras, which amounts to the being the national oil company of Brazil. It's got a wildly fluctuating dividend, but it probably yields 12, 15%. Could go much higher. Of course, the president of Brazil is crazy, but I don't think even though he's crazy, he's unlikely to destroy the national oil company. So I like Petrobras for both.
It's a 19% yield right now.
There you go. I mean, it might go down, might go up a lot. So that's one for both capital gains and dividends. And also Ecopetrol in Colombia. And people forget Colombia is right next door to Venezuela, but has a lot more light sweet as opposed to, gooey, tarry oil. And it sells at a big discount because it's 88% owned by the Colombian government. It pays a dividend of what, Adrian? 12% or something? I'm in that area.
I don't know, to be honest. What's the symbol?
EC is the symbol.
EC what, sorry?
EC on in the New York Exchange.
Oh, just EC, sorry. Yeah, I haven't bought that one myself. I have bought Petrobras. Well, right, Bloomberg really messes. Let me just look at this. Yeah, it's about a 20% yield.
Well, in addition, just out of interest, that company owns huge assets of all types in Colombia. And of course, Colombia just elected a crypto communist as president. Yes, I know. But they have, everything from toll roads to electrical transmission lines to, and it sells for like 4 times earnings or something like that. So yeah, I'll take a shot at it because governments come and go, but the oil is needed. So, and also small oil and gas companies in Alberta, especially in Canada, there's probably 20 of them at least. And a lot of them are yielding 8 to 10% in current dividends, which is interesting because natural gas is in real terms just about at all-time lows. It's trading at about 220 right now, which is about the lowest it's been about in the last 25 years, except the dollar's worth less than half it was at the previous low of about now. So, and Alberta is the best place insofar as there is a halfway decent place in Canada. So, those are cheap stocks also selling a lot of them 5, 6 times earnings with huge dividends. So
and these are producers or explorers you're looking at? Oh,
no, not explorers, producers.
The real key to me with buying those smaller companies is you really want to make sure the balance sheet is strong so they can withstand, let's say the price of natural gas stays low and we have another year before it starts to move up because it moves in cycle, it's cyclical, seasonal, as you know. I think the critical thing is that they have a strong enough balance sheet to survive. And the second thing I would say is with the smaller companies, we're not talking about Petrobras right now, but with the smaller companies, look on the current dividend yield as a bonus because if things remain bad for a while, they may have to cut the dividend.
I agree, but with natural gas at all-time lows, and these companies are natural gas heavy, I'll take a shot. Yeah.
Sure. Yeah.
If I might, what are your thoughts on silver? I was just reading here recently where Silver Institute's out with their survey. They're looking at 2 years of deficit production that they say has outstripped 11 years of excess production. And, you know, silver's prognosis is looking good going forward. We've heard this before. Are you buying into it?
Well, you know, gold and silver, two different elements with
100% agree.
vastly different stories. But silver is a much smaller market. Oh, look, let's say there's 80 million ounces of gold mined every year and 800 million of silver, rough numbers, I mean, more or less. But all the silver that's mined is consumed. It's not set aside like gold is. And it's a high-tech metal. And I'll tell you a good indicator. It's that there aren't any, to my knowledge, silver letters anymore. Silver is almost like a religious icon with certain parts of the public. You know, they think it's like the true cross or something. And those people have pretty well gone away. They've been so beaten up by silver over the last, I don't know how long. So yeah, I'm friendly towards silver. I really am. It's not like, look, back in 2001, it was selling for $4.50 an ounce.
Yeah.
And now
That was
here's
my first purchase, $4.53 an ounce.
And here's something that people don't think about. In the year 2000 or whatever, when it was selling for $4.50, it was cheaper in real terms then than it was back in 1971. So it was giveaway. All right, so it's gone up 6 times since then. But yeah, you got to like silver, and I own a bunch of it.
There is a silver letter, and this is very rude of me. I can't think of his first name, but Morgan, you know the guy, David Morgan.
David,
Yeah.
Morgan,
Yeah,
He's a nice guy.
Yeah.
He's a nice guy, but he's got to be living on rice and beans right now because nobody cares about silver. But
well, I do. I always look at gold as, you know, a small portion of your portfolio for wealth insurance. I always look at gold for that. I rarely, if ever, look at it as profit potential. I always look at silver as the potential for profit at times. Now, for my wealth insurance, maybe a tiny sliver is silver for divisibility. You know, if we ever have to barter in the streets, which I don't think we ever will. All right, maybe I'm
not so sure of that. I'm not so sure.
Okay.
I'm not so sure of that.
But I always look at silver as potentially profit potential at times like these, you know, where that gold silver ratio is so damn high. I mean, let's face it, a year or two ago it was 127 to 1. You know, it's crazy. It just got under 80. I still think that's an indicator, even though we're tampering with markets, that's an indicator that the gold and silver prices are both low. But when they start moving up, I think silver will still, even in this world, outpace gold.
Well, you're right, Rick. And I think everybody listening to this right now should own at least 1,000 Maple Leafs or Eagles and just salt them away. What's the premium if the premium isn't too high?
Well, Eagles right now, silver Eagles, 75%, Doug.
That's
I don't think you
horrible.
want to. I don't think you want to go there. But
That's
there are
shocking.
other ways to own silver where you don't have to pay that kind of premium right now.
Who do we call to find out?
Call us, of course.
Okay.
We still sell it, but we'll give you options for rounds and things of that nature that are much lower in premium. But the
And what's
Eagles,
the premium on junk silver today?
that's about 40 to 50%, somewhere in there. Still way too high. You know, 2015 in the summer when all the stuff in Greece was blowing up, we were selling junk silver until it blew up at about 4 to 6% over spot. Now it's 45%. And we actually had to tell people late that summer, stop buying junk silver. We love it, but not now. And I'm there right now for junk silver as well.
I think at times in the past, it's actually sold at a discount from the spot price.
Not in my 27 years, but I'm sure it did. I know Glenn and Michael could probably tell you stories.
No, I
about
remember in
that.
the 80s. Yeah.
Covering it on margin while they're sitting at the pool drinking drinks.
The other huge difference, and you know this, both of you know this, the other huge difference between gold and silver these days, everybody knows that silver is more industrial. Everybody knows that there aren't these huge stockpiles of silver waiting to be dumped on the market and so on. But the other big difference is on the supply side. 75% of silver production right now is byproduct silver. Now,
Very
some of that
inelastic.
is byproduct of gold, and they both move, broadly speaking, in the same direction. But most silver, I'm sorry, I've got a flu or cold or COVID or something. Most silver byproduct, most silver production today is byproduct of zinc or of lead. And that has really important ramifications, because it means that silver production, up or down, does not respond very well to changes in demand for silver, up or down. When the demand for silver starts soaring, you know, the lead miner in Bolivia or the zinc miner in Peru, they don't say, oh, let's ramp up our production because 10% of our production is silver.
Yeah.
And so so silver doesn't respond, silver production doesn't respond to changes in demand. That's why the price of silver is so much more volatile, and one of the reasons why the price is so much more volatile than the price of gold. Why you can have these long troughs, because when silver demand is not very high, the zinc miner, the lead miner, they're still pumping out the silver. Yeah. But it also means that when you get a big influx of retail people wanting to buy silver as a monetary metal,
can't meet
the supply won't keep up. And so the moves will tend to be much sharper, I think.
Well, plus the money in that market versus, say, gold, or even versus gold, is so much smaller. So you see, money start moving to the precious metal space, it'll have a much bigger impact on the silver side than it would in the gold side. What was that, Dad?
And talking about precious metals, I don't know, there are platinum coins that you can buy, right?
Yes, and palladium as well.
Well, I'm interested in platinum because in South Africa, I think that country is going to go into collapse because electricity is down all the time and all kinds of problems. And most of the platinum in the world comes from South Africa, and the rest of it comes from Russia.
Yes.
So right now,
the roles are reversed for palladium. Yeah.
That's right. So with platinum at about 1,000 and palladium at, I don't know, 1,600. Yeah, I think they're both interesting buys at this point.
I got to think at this point, we saw the substitution for palladium for platinum back when, God, I want to say platinum was $900 an ounce and palladium was down around 130, 140. And it made perfect sense to substitute, retool your industry for that. You got to think we're near that point where it makes sense to go the other direction. Don't you think?
Well, a technical question, but I buy them. The only problem with platinum and palladium is that this is a factet, not a factoid. That's a phony fact. But a factet is that of all the metals in the periodic table, which is about 70 elements that are metals, there are only two that don't look just like silver in their pure form: copper and gold. And that's the problem with platinum and palladium, is they look too much like silver.
Yeah. It's it's a tough marketing campaign, I guess.
Yeah.
So
you like copper
overcome
here? Do you like copper? Do you like copper here?
This is a play on the one hand, it being incredibly hard to build a new copper mine on the one hand, and on the other hand, people say, supply is going down, can't build a copper mine. Demand's going up, the world's going electric. Well, I buy the first part. It is hard to build a new copper mine, but is the world going electric? Well, it's going to be constrained by the amount of metals that they can mine to make that possible. And even then, if they can find enough copper to put in the Teslas and so forth, they're going to have to build a lot more electrical capacity and a lot more generating capacity, which means nuclear power, which means I think uranium is an indirect way to play the electrification of everything, if that happens. I guess it will in the long run. I really like uranium too.
Yeah.
I tend to agree. They're not going to keep all that stuff going with wind and solar. There's no way in hell
it's
right
not.
now.
No, that wind and solar are basically a giant scam. I mean, they're
And
nice.
also, frankly, if we have a serious recession, in a serious recession, we care a lot more about food and housing than we do about ESG. We don't really care how many women are on the board of it, no offense to women, how many women are on a board of a company, and we care about eating and we care about, shelter. And I think I can't help thinking that this whole electric vehicle drive might run out of steam a little bit if we have a serious recession.
Yes, well, if we have a serious recession, and I would not use that word, Adrian. I think we're going to have what I call the Greater Depression. It's going to be much worse and much longer lasting and much different than the unpleasantness of 1929 to 1946. And one of the commodities that I might want to be long as it gets really serious is lumber. Now you say, what, lumber? They use that to build houses. No. It's to build crosses. And I hope that Pennsylvania Avenue is lined 6 deep in Washington, D.C. from end to end with the people that live in Washington, D.C. on lumber crosses. I think
Maybe caskets too on that theme. I'll just throw that out there.
That's right.
Well, thank you for the-
Too early to buy lumber, but just a thought to keep in mind.
Do you have questions coming in, Rich?
I do. Just one on this topic, and then I want to ask one more before we get to the questions, because I want to
Okay.
just go down the list and start handling all these questions. But while we were on the topic of silver, somebody said, can you recommend any silver ETFs from an anonymous attendee?
Well, I guess the premium on silver coins is so high. That's higher than I even thought it was, but I laid in my supply long ago, so it's academic to me. I don't know. Look, I don't like ETFs to start with, so I can't tout one. I don't know. What do you know any, Adrian?
Well, yeah, I mean, if you're talking physical, Sprott, of course, has a physical gold trust and a physical silver. The silver one is PSLV, and that holds physical silver, and you're not paying anything like that kind of premium for the silver. I'm like Doug, I'm not a big fan of ETFs in general, but I'm particularly not a fan of mining ETFs. So PSLV is a physical, they own the physical.
Yep.
The mining ETFs, I'm not a big fan of, because when you're looking at the mining ETFs, whether it's GDX, GDXJ, whatever, you're getting the good, the bad, and the ugly. And as I think we discussed here, if you look at those whole world of mining stocks, there's as many ugly as there are bad, and there's relatively few good ones. With an ETF, you're buying everything. So I much prefer with mining stocks to buy individual stocks.
And I'm with you guys in terms of not being a huge fan of ETFs. I don't like buying a proxy for gold or silver when I could just go out and buy gold and silver. Now, I know that could be a deterrent when you have 75% premium on Silver Eagles right now, but ETFs aren't your only way to maneuver around that. As you know, Adrian, and I know Doug knows this as well, we've got the Perthman Certificate Program. I mean, there for every supply squeeze over the 7 years that this program's existed, they have not changed their premium. You get 100% backed metal, silver, gold, and platinum at 2.25% above spot. You don't have to pay those high premiums. There are other ways. Just give us a call and we can guide you.
So we can trust them.
Well, in this case,
sorry.
it's not the U.S. government, but no, in this case, it's the state government of Western Australia, incredibly resource rich, and listen, they'd be shooting themselves in the foot if they did anything wrong in this regard. That's their livelihood.
Do those people make it possible to redeem the certificates for actual gold?
Absolutely,
Kangaroos?
absolutely. You can do that at any time, all or in part. And we've had people exercise every facet of the program in 27 years.
Oh,
It's an excellent program.
Yeah, it's
really
fantastic.
is. And it's
that's a
low
big
cost.
plus. Big plus.
Yeah.
So you don't have to carry your kangaroos in your wallet.
You don't have to. Now they still make those too, and we sell those, but you can, once you've gotten what you need to have close at hand, where you feel comfortable to meet a short-term need, or you feel comfortable storing and safeguarding it yourself, it's good to put it in the hands of the professionals, and you can do it with 100% backing, no ongoing storage fees, no fabrication fees, and just 2.25% above spot. There's no derivatives exposure. There's no leasing to third parties, and there is 100% insurance at full market value at all times. I mean, they do business properly. We've had a lot of people dig into them over the years and say, well, they can't do that, or they can't do this. And when they dug and asked the questions and got the answers, they realized, oh, they can't. We helped design a program that allowed them to do what they do the way they do it. I still think it's probably one of the best kept secrets in the metals industry 27 years later. So.
No, I agree.
Good point. I'd forgotten about it, quite frankly. That's a very good point, Rick.
You never have to pay those high premiums in a supply squeeze. Never, ever. So call us instead.
And they own bars, right?
What's that?
They own bars.
Yes.
Yes.
You own bars, coins, whatever you choose. You can own unallocated metal, which is still 100% backed. So it would be an interest. Like, say you have 100 ounces of gold there, you might have 100 kangaroos one day. The next day it might be 1/4 of a 400-ounce bar, but that metal must be unique to you, or they can't sell it to you. So, and it serves a purpose. The reason they do that is it actually lowers their leasing costs by having you build up the metal that sits there waiting for the world to come buy it. It's a great program.
Yeah.
So
you will give us your phone number, won't you?
yes.
Okay.
Well, it's easy. It's 800-831-0007. What's 10 better than James Bond? So, all right. So moving on. The commercial's over with. Bob said beekeeping might be one of the industry. I don't know if it's good or bad, but he's recommending it. Let me see. I have one question before we move on to this, Doug, and I just got to ask you, have you read any good books lately? And you might know where I'm going with this Charles Knight thing.
Well, yes. Even better than, have I read any good books? I've written some good books. A lot of people don't know that. Well, let me put it this way. I've written 3 novels, co-authored with my friend John Hunt, because there are certain things that you can say in fiction that you dare not say in nonfiction. So, thank you. That's the second in the series. Our hero, Charles Knight, starts out as that's the third. Starts out as a speculator, gets lucky in a junior mining stock, goes to Africa, gets involved in a bush war, makes $100 million, has it stolen from him. But not all of it. And he becomes a drug lord, where we show that a drug lord can also, as well as a speculator, can be a good guy. And we go into that, both BERA.
This is not a bad drug, by the way.
No, we talk a lot about all kinds of drugs, and they're all good, and Charles is a good drug lord. But then they steal his money from him again. He's unhappy. So he becomes an assassin, because he decides there's some people that just need killing. And Assassin, I think, is quite a good book. They're all 3 of them are good.
They're all excellent, Doug. They are all excellent.
Thank you, Adrian.
Excellent.
Well, there's 4 more to come.
Haven't you written the next one already?
Oh, we're freezing up. Are you there with us, Doug?
Someone doesn't like what he's saying. No, you're right. Isn't it?
No, we're back.
Yeah.
So haven't you written a 4th one?
Can you hear me now?
We can hear you now. If you're a little
the
darker, we lost the light, but we can hear you.
I'm in Buenos Aires, and this is, it's don't worry, you'll have this coming to the US in a few years. Don't worry. But the 4th one, which hopefully John and I will get out before we shed this mortal coil, is called Terrorist, where Charles is accused of being a terrorist. And then there are 3 more novels after that, where it really gets radical, more radical than being a terrorist. So it's all planned out, the whole septet. But Yeah, get the first three. I'm glad you guys like them too. I like them.
Well, Doug, I'll tell you something. I think I've mentioned this to you before, but it's a little bit of a, I don't know if you remember, you gave me a copy of your book at a seminar in Vancouver once. And I thought the first one, Speculator, what's it called?
Speculator, yeah.
Yeah. And I thought, oh, Doug's written a book. That's nice. And I stuck it in my case and I got on the plane and I got out my laptop. I thought I was going to take your book home, stick it on the shelf and just tell people I had Doug's book. Well, there was no internet on this plane. So I thought, oh, shit, excuse me. Sorry. I thought,
It's
oh,
out
dear,
there. We can't pull it back.
what am I going to do for the next 8 hours? Oh, let's have a look at Doug's book. I pulled out your book, Doug. That is a page turner. When I got back, I stayed up all night. I could not put that book down. It is an incredible book. It's an easy read, but it's a fun read. It's a great book, and the other two too as well.
Yeah,
Well, thanks, Adrian.
We're gonna put this when we recap tomorrow. We'll send out an email to all of our attendees, and we'll go ahead and we'll recap a few different things. One of the things that'll be in there is where you can go to get these books, because Doug's giving them away. They're like $25 a piece, and it's what higher ground or high ground.
High Ground Books.
Yeah, highgroundbooks.com.
High Ground Books.
Yeah, so easy to get, but we'll put the link in the recap email.
Amazon has them too, but John and I autograph the ones that are in hardback that we sell.
Nice.
And also, don't forget to mention to people that they can go to internationalman.com or my podcast, which is on YouTube, Doug Casey's Take.
Yes, and those links will be in there as well. Looking at some of the questions, somebody asked, what about Heckler Mining as a buy? Anybody want to jump on that one?
Not my kind of stock. Don't buy it. I mean, I don't own it. What do you think, Adrian? Do you know anything about Heckler these days?
I do. I had a meeting with them recently. I don't own it. Let's just leave it there.
Okay. Another one, Doug, can you suggest a natural gas play in Alberta? You were talking about there's 20 of them or so there.
Yeah, I hate to mention individual stocks like that. There's 20 of them at least. So no, I hate to mention one. You'll have to do a little bit of your own research. You don't want to take touts of stocks that you don't research. So don't buy anything that you just hear verbal information on. Big mistake generally.
Gotcha. Anonymous basically says the novels are all great. So you already have a fan that's read them all. And they also said, let me see, is it safe to travel within the US with precious metals? I can cover that. It's safe enough. I mean, I've done it. We travel to these conferences all the time. We typically, have metals on us on and off at different times. The biggest problem, honestly, is, you try to keep a low profile when you have metals and you're going through the airport, and invariably you want it on your person, right? So you can control it. And you're going through TSA and your bag comes up on the screen with the infrared saying, what's this big block of metal? And right away when they stop the belt that it's your bag that they're going to pull out. And I'm already walking over there explaining, yeah, that's mine. I'll come talk to you. But they pull it out and they hold it up for everybody to see and say, what do you got here? So it's like when we used to take metals to the post office and, you take the junk silver in those 2-gallon paint buckets all sealed up with lead seals and you plop it up on the counter and they say, what do you got in here? A bunch of silver? They don't think. And they're really your biggest threat is, harming your ability to keep a low profile. But there's really nothing wrong with it. I've never had anything confiscated, et cetera. Maybe I'm lucky, but no issues. So.
Well, TSA is the bane of any intelligent person's existence. I mean, what kind of submoron will wear a silly costume and go through his fellow citizens' laundry all day long? I mean, how degrading for all concerned.
Yeah.
All right. I know. Does anybody want to jump on this one? You guys familiar with Keith Weiner, Monetary Metals?
Mhm. Yeah,
No, no.
Okay. They're saying,
Okay.
can you provide your view on Monetary Metals business model? I haven't had an update since last year in New Orleans, so I'm really not in a position to do an update on that at this point. I count Keith as a very bright individual, but I don't have current
Yeah,
info.
I'm with Rich. I don't know enough about the business to make a sensible comment on the business, but Keith himself, I think, is very honorable, very bright. Yeah, no particular red flag.
Now, typically, he'll be at New Orleans every year. I don't want to speak for his schedule, reach out to them, but the best way, he was very busy giving people updates on their business and their development while he was there. I got one of those briefings last year, so you can certainly reach out to him and see there. Let me see what else we got. Get back to we talked to all the countries you've been to, Doug. So top of the list here, the Fat Cat would like to know, can Doug give me the 3 best countries you would deport yourself to live in for the rest of your life after the USA goes to hell?
Well, right now, I basically live in Argentina and Uruguay. They're right across the river from each other, and very similar in lots of ways, very dissimilar in lots of other ways. So I'd say that's the nicest pair in Latin America, for my money anyway. And in the Orient, lived in Hong Kong for many years, like Hong Kong, but it's not the same place it used to be. I think if you're going to go to the Orient, I think Thailand was then and still is a great favorite for all kinds of reasons. Fantastic place. So those are my 3. Am I missing one?
That's 3 for sure. And I'll just throw this in. Thailand, I've never been there, but Michael has, and others have really talked up highly the level of medical services there. I mean, you go in for like full workups that are a fraction of the cost, and the medical care is out of this world, off the charts. So I've heard nothing but good things. I think there's a lot of medical tourism that goes on to Thailand right now.
Absolutely correct. And if you don't look at the right side of the menu, Singapore is a great city. If you like a city environment, that's very good too. So,
Adrian?
Yeah, no, I was going to mention Singapore, but it is expensive, and you put it much better than I did. But I think if the question is to go to after the US collapses, you probably want a place where you can keep a relatively low profile. And so Thailand and Uruguay would be the sort of places where you can live without coming much to the attention of US authorities. You don't really probably want to go to England, for example, although I love England, great place to live. But I would also say that the question, there's one word wrong in that question, and the question is, where would I go after the US collapses? And you
want to do that before
the US.
It's too late after. Yeah, good point. So let me see. Are brokerage account funds in danger to be stolen by governments? Orlando sends that one in.
I think in less danger than your bank account that's over the $250,000 limit, which they may or may not keep bailing out everybody like they did with SVP, the bank in San Francisco.
Yeah.
But, the thing is, in today's crazy financial world, as John Corzian's proved with what the hell was the name of it? It was the largest commodity broker, and they basically stole everybody's money. So the rule of law is breaking down in the West generally and in the US.
Yeah, I think that's a big indicator of lack of accountability and responsibility. You can see it at every level. It's just another way it's manifesting itself.
Yep.
So, JJ comes in and says, by investing inside a self-directed IRA, is this the only way the smart U.S. investors avoid the passive foreign investment company high taxation issue by buying junior minor stocks?
Hmm.
I don't know. I don't know if I'm capable of answering that one.
That's
Well,
a tax question.
Yeah, I can jump in there if I may, because I've done a lot of work on this PFIC. And as people may know or may not know, virtually every junior company would be considered a PFIC because they don't earn any operating revenue. So there's various tests for whether you're PFIC, but one of them is that you have to have more of your income has to be from operating income than passive income. And for an exploration company, they by their nature have no operating income. So even if they only earn $100 a year in the bank, that counts as passive income and they become a passive investment company, a PFIC. Got to be a little careful what I say here, but the PFIC rules were introduced originally to capture wealthy Americans who set up investment companies in Cayman, in Barbados, for them to do all their regular investing and avoid taxes. And the PFIC rules were set up to catch those people. But like a lot of things, there's mission creep, if you like, and they have encompassed all sorts of things. A company, I've mentioned Franco-Nevada. You know, Franco-Nevada, up until a couple of years ago, when they started buying more streams and royalties, was a PFIC, which is ludicrous. No one's buying Franco-Nevada to avoid taxes, but it counts as a PFIC. Now, I have talked to a lot of people on this. I've talked to my accountant, I've talked to other accountants, I've talked to the lawyer that's probably the top lawyer on PFICs in the United States. And they have all said to me that the IRS simply doesn't go after people who don't report PFICs on their tax return. It's something that just doesn't happen. That doesn't mean it couldn't happen in the future. But right now, most accountants, I would bet you, if you ask your accountant, oh, I own Ajax Consolidated or, you know, Moose Pasture Incorporated, I need to report it as a PFIC, they'll look at you like you're crazy.
Gotcha. All right. Thank you, Ken. Corzine blew up Man Financial. That was the name we were looking for earlier.
That's the one, yes.
Yeah, thanks, Ken. So Anthony asked, do you like First Majestic Silver? It's Keith, right? Keith Newmeyer.
I don't own any individual silver companies that I can think of at this point. There aren't too many of them. How about you, Adrian? You might.
Yeah, I don't own First Majestic. We did own it when it, you know, after they closed Jerritt Canyon, which they never should have bought in the first place, and they suspended operations at Jerritt Canyon, the stock collapsed. So we bought it at that point, but I've sold it since. You know, my mother said, if you can't say something nice, don't say anything. So we own Pan American, which is, you know, obviously one of the largest. We own Fortuna Silver. We own quite a few of the silver companies.
Okay. Bob is in saying, an analyst pointed out wealth comes economic production and services. How do you end this financial gambling as a sense of wealth building, income tax evil as it rots out personal responsibility? How do we curtain the gambling and get back to investing for production and services? So I just kind of paraphrase here. I think what he's saying is, listen, you know, investing and economic, or the economies are about production and services, about generating some sort of value. And it's turned into everything but that. How do we get back to productive services, goods, et cetera? Is there a way? And this kind of segues into a question Adrian asked offline, is there anything good out there right now? Maybe we'll get to that next, but go ahead, Doug, if you want to answer that or weigh in. Is there a way back?
No, I don't think there is a way back, for the same reason that there's hardly a way back for Argentina. The state and all of the distortions that it's cranked into the economy and the society are so great at this point that I just don't see how they can be undone. So sad story. I mean, I could give you my advice on how to do it. I mean, for instance, I'd default on the national debt, then I'd cut military spending by 90%, and then eliminate all welfare. And of course, if you did all these many more radical things like that, but if you did it, you'd be breaking all these doggies' rice bowls, and they'd go wild. Now, that's on the downside. The good news is that most, not all, but most of the real wealth in the world would still exist after you got rid of all these distortions cranked in by the government. But it's not going to happen short of a revolution, which may be on its way. I don't know.
I think we've gone so far, but you have to have some revolutionary collapse of some type, whether it's Rome or 1789 or whatever it is. You have to have some kind of cataclysmic event to cleanse the system, because as Doug mentioned, the distortions are so huge. And the other thing is, so many people rely on the government, and once you get something for free for a period of years, you really don't like it being taken away from you, even if you don't deserve it, even if you've never really thought about it. But if you get something for free for long enough, it's very difficult to take that away from people.
Yeah, I hear a lot of negativity from some of our clients. They tend to pick up on some of these theories that are propagated out there on the internet, and they're like, well, they're gonna take your property and they're gonna move you into a 15-minute city, or they're gonna do this, or they're gonna do that. And I'm like, think about it. Would you let them do that to you? At some point, I still think there's more good people in the world than bad people. I'm convinced of this, and they just don't get the press. But at some point, if you push good people far enough, they will fight back. They're going to say, enough is enough. That's stupid. I'm not giving up my home. I'm not giving up my arms. I'm not giving up my religion. I'm not giving up this. I'm not giving up that. Whatever the case might be, at some point, they're going to push back and say enough, and there will be a revolution. And that doesn't necessarily mean to be bullets all the time. It could be a peaceful revolution. We've had them in America before as well. And we could see that. But I just think at some point, we got to stop worrying about everything going to hell. And
you'd like to think
be part of fixing it somehow.
You'd like to think so, Rich, but you look at the restrictions that were placed on people during COVID.
Yeah.
And I was frankly staggered that, in Britain, it was even worse than in America. Britain traditionally has had a sort of a bit of an individualistic ethic, but I was staggered that people in America just went along with it.
They're still going along with it to this day.
I never thought Americans would submit that way.
Yeah.
So when we say there's a point where people will not accept, I really question that. And the other thing, of course, is the other part of that is that so many people, we were talking about this the other day, Doug, so many people now depend on the government, and it's not just the government, it's big institutions as well, which in my view are even worse than the government, but in many ways. But so many people depend on the government for their livelihood, they simply cannot afford to rebel. Yeah. And these days, if you call someone by the wrong pronoun, you don't just get a call from the headmistress if you're a teacher saying, hey, just be a little more sensitive next time, will you? You get fired. And you're out of a job, and you can't find another job as a teacher in a public school in America or in England, not public school in England, because that means something different in England. But you know what I mean?
Yeah,
in a government-run entity, you can't get another job. You are blacklisted. And so people will have to go along. Most people will go along because their livelihood and their children's livelihood, their family's livelihood, depends on them going along.
You're going to say
that's absolutely right. And it's probably even worse than that, because you've got to look at the fact that lots of Americans were ratting out their fellow Americans for not wearing masks when they're walking down the street. Not only are they stupid, but they're inculcated with actual evil. But look, the last election, they say that an all-time high number of people voted for the Bidenistas. And these people are actual Bolsheviks. They're actual Jacobins. So most of your fellow Americans think that what's going on in Washington is just fine. So no, I don't think there's much hope at this point.
Yeah, I always used to believe one of the things that set Americans apart, one of the things that made us unique or different was that we questioned authority. I always thought that was something that was different about us, maybe in the DNA. Maybe that's going away. I don't know. Maybe because we're so depending on the nanny or what have you. I don't know.
Right. But I mean, if I'm in a TSA line and I say something to the TSA person, which I always do,
Yeah.
I get people behind me telling me to shut up and move along. You know, 20 years ago, Americans would have supported you for, as you say, standing up to authority.
Yeah, understood.
No, worse than that, I've seen people thank the TSC people.
I know.
After
Oh.
shake them down.
That blows my mind. It makes me sick.
Well, along that line, Paul's asking, I don't know if we're going to get to all the questions because it's already 8:25. We're probably going to wrap up here a little bit. But with Social Security and Medicare lacking funding, what's to stop the U.S. government, Congress passing a law to seize all IRAs and 401ks and 403bs and telling Americans we will merge your retirement accounts into Social Security and pay you benefits? I'll let you guys go first. I'm more of the same. I don't think this is ever going to happen. I think there's a point where you say enough is enough and you start fighting back and you start taking what you've worked your whole life for. I think that's one of those things that defines I'm done and I'm not going to take this anymore.
Yeah, but remember, when the government gives you something, such as they give you tax exemption on your IRA, they can tell you what you do with it.
Yeah.
And so I wouldn't be at all surprised. In fact, I'm surprised it hasn't happened already. I wouldn't be at all surprised if the government said that, you know, 30% or whatever of IRAs and 401s have to be invested in the treasuries, and it'll come about because of some scandal somewhere. They won't do it when stocks are doing well, but when stocks are blown up and people have lost money, they'll say, look, you need to, this is wrong that you gamble, and it has to be in something safe like treasuries.
Well, yes, and as I said, I'm in Argentina right now, and it was, I don't know, 5 or 6 years ago, I can't remember exactly when, the Argentine government took all private pensions and merged them into the national system.
That's right.
And basically stole it all. And did they get away with it? Of course they did, because the average chimpanzee out there is outraged that middle class and beyond people have this money, and they shouldn't have it.
Right.
It should go to the common weal. So, and the US is only a decade or two behind Argentina.
Gotcha. All right. Well, I think there are more questions out there. We're not going to get to them all. I can probably do my best to remember them. There's only about 6, 7, 8 that are out there, and maybe share them with you guys afterward if you have the ability to weigh in.
Sure.
We'll try that. And I'm not sure how we can get them out to everybody because I don't have all your emails. So maybe the best thing is if you have a question that went unanswered tonight, send me an email at infoasi@assetstrategies.com, and we'll do our best to get answers. But we do have to kind of pull the plug here. I want to go around though, and this is one of the things that Adrian kind of touched on the back as we were leading up to this. He talked about what is there that's good out there, right? Is there anything out there that's good? And you know, I'd kind of pass it around. Your parting thoughts, and you know, anything that you want to plug. You know, now's the time in terms of your services. It'll be in tomorrow's recap as well. But just let me know your one most important thought you want people to leave with. And is there anything good out there? You know?
Well, I'd say medical technology keeps advancing. That's a real positive thing. And Elon Musk is making tremendous strides in the privatization of space. That's great. So there are good things that are going on, no question about it. Even artificial intelligence, if it becomes widespread and just isn't kept within the ken of big corporations and the government, that could be like a new Gutenberg revolution. So a lot of people worried about it. Yeah, there's dangers and everything. But sure, there's plenty of good things going on. Problem is I think we're in for 10 really tough years, notwithstanding those good things.
Yeah, and in terms of AI, I get your point. As long as it's not going into like newspeak, right, or something,
Right.
and used the wrong way, there's a lot of potential there. But yeah, so I guess your parting thought is buckle up. We're in for some rough roads ahead.
That's right.
Okay, Adrian.
Yeah, I would agree with that. I mean, obviously, you know, the advance of technology is mostly positive. I think one of the best things out there is the gold stocks are so incredibly cheap. I mean, everybody has an almost well, I shouldn't say a lay down, but I mean, it's within the grasp of everybody to buy gold stocks today and sit on them for 5 years and make money. You know, everybody can do that. That I think is a good thing. So,
All right. And I'll go around. So for Adrian, again, it'll be in the email tomorrow, but Adrian Day Asset Management will have a link where if you're interested in their services, if you're interested in this space and you're looking for guidance, and it's not just mining or resource stocks, it's global stocks and diversification, et cetera. You definitely need to check out Adrian and see what he can offer versus everyone else out there. There's a reason he's been doing this for a very long time. I'll just say that. In terms of Doug, he already mentioned it, International Man. If you're not reading it, you should. It'll definitely open your mind. If you're not one that reads, you can go to YouTube and Doug Casey's Take. You can get a lot of good insights from Doug there. Very fertile mind. And obviously, we talked about the books already. Go to highgroundbooks.com, $25 a piece. You get an autographed hard copy. From my standpoint, I'm happy that people are starting to rediscover gold again. You know, it's been kind of a hated, forgotten asset for a long time. I do think it serves a purpose. It's not the time to go 50% in your portfolio. We hear people say, oh, well, there's nothing else to own, I'm going to buy gold. I don't think that makes sense. You know, you have a small amount in metals that do their job for insurance. They're cheap and I still think hated to an extent right now, and therefore there's an opportunity for you. Every dip, because we're going to get over 2,000 and run, every dip you should be taking advantage of if you don't have your allocation set. And what's good in this world? I mean, just look at the people on the screen. I mean, there's some incredible people out there. You choose who you associate with. I choose these people here, and the folks listening in tonight. Thank you all for coming. You know, we've got a new website out there, assetstrategies.com. Check it out, and come to us for precious metals. Anybody looking to buy metals, we're the folks. I just want to thank everybody for your time. Doug, I know it's a long visit with us, but I appreciate you taking the time. And Adrian, as always, love you. So
Great seeing you guys both.
thank you.
Thank you all. Have a great night.
Bye.